to the Wednesday morning market wrap. I think I went a bit early then. Good morning and welcome to the morning market wrap for Wednesday, the 7th of October. I'm Greg McKenna. I'm sitting in a hotel room in Sydney at Anderlady Lodge, which is the old St. Joseph's, Sisters of St. Joseph Convent. It's a fantastic place. When you live in the bush like I do, to come here, it's ever so tranquil. Anyway, interesting night last night. Crude oil tried to break higher, hasn't quite done it yet. And as I've been saying in these podcasts for a week or two, I wasn't bearish on everything else because it didn't break down last week. I'm not overly bullish on everything else because it hasn't broken quite up. But I will say that overall, the market is looking reasonably good. I'll just share the chart that I used in my Business Insider and Go Markets reports this morning, and you'll see that it's still in this range, but that we haven't broken out. So with highest we've been since these couple of days after the lows of August. Is it breakout time? It's hard to it's hard to say yes just yet. But we've started to hear noises about Russia talking to OPEC. We had the Americans come out last night and say that the supply-demand imbalance is going to get some work next year. And I think about that, and I think about what's baked into the cake. And I just saw a tweet saying how short traders continue to be oil, and I just have to think that there's a real chance that we do get a break higher. Now the question, of course, is how high does it go? And you can see already today that we've got a slight down day. So the dailies would suggest that if it, the break higher is probably going to propel it up towards 51, 52. That's a 200-day moving average. If we have a look at it on a weekly basis, my slow moving average is 51.60. So it's still looking like it's got plenty of wood to chop there, but you have to think that we are going to see a test of $50, and just to find out whether or not resistance is there. As always, I don't trade the break until it happens, and that's the safest way to trade things. In terms of the Aussie dollar, I'll talk about that while I've got the charts open. Got this nice little W bottom here. This trend line there is the trend line that goes all the way back to the September 11 low. Obviously, the low in the Aussie was April 2001 at 47.75, but we had a subsequent retest in the 48 region in the direct aftermath of the September 11 attacks. That's where that goes through. This is the GFC lows for a couple of months, and this is a monthly chart, obviously. So we've broken down. We're trying to break up. Monthly says that the Aussie is heavily oversold. Weekly suggests it's slightly oversold and starting to rally. My sense, we're going to see the Aussie retest this 72.50, 73 cent region, and then we'll see what happens there. So I'm on the buy side of this one for the moment. Obviously, yesterday the RBA and the comments that they made with regard to, or really the comments that they didn't make, and the sanguine outlook that they had for growth in Australia was really what got it going. But then last night we saw a deterioration in the trade balance from the US, which has got forecasters, pundits recalculating their expectations for growth. Interestingly, the Atlanta Now, which is the go-to real-time updating expectation of GDP growth, increased back from 0.9% to 1.1% last night due to auto sales and those sorts of things. So it's still fluid. It's still not great growth. If you think about what 1.1% means in Aussie terms, that's 0.25% for the quarter, roughly, maybe somewhere between 0.25 and 0.3. So it's not the strongest economic growth you'd ever see. And if Australia saw another growth, another quarter of growth like we saw last month, then you'd see the Aussie dollar much weaker, which of course is why the US dollar weakened last night. That of course helped crude, that helped iron ores up a bit, the Aussie dollar's higher, the euro's higher again, even though there was some weaker data out of Germany. And so we've got this mixture at the moment of, and copper held 236 a pound. So we've got this mixture at the moment of markets toing and froing, trying to figure out what's going on. My sense is that oil is the key. and that if we can see a break higher, to see some other markets break higher as well. On stocks, the performance was divergent last night. We saw the Dow finish roughly in the red, sorry, in the black, just, while the S&P finished in the red. And part of the reason for that was that DuPont was up 7.66% because their CEO said that she was going to step down. Now, when you look at what happened in biotechs and those sorts of things yesterday, we saw that they were under pressure. So the Nasdaq finished down and the S&P was jagged lower as well. But perhaps an encouraging sign is the fact that we have the VIX back down under 20 for the first time since the acute phase in August, when market volatility increased materially. One of the things about volatility, as I always say, is, or as Mandelbrot taught us, and I always say, is that volatility clusters. And from a trading point of view, what that means is that people have, in the initial stage, people have smaller positions held with less conviction, so you get more volatility. But after a time, people aren't trading, the positions are smaller, people have been washed out of the market, and so that volatility starts to fall. And perhaps with the recession, or the receding, I should say, of calls for the Fed to hike rates this year, and the data starting to support that, and perhaps with the lack of big positions that can be flipped on these 1% and 2% moves, the reality is that volatility is going to start to go down. But as I said, there's a lot of shorts in the Aussie, there's a lot of shorts in oil, there's still a lot of shorts in the S&P. So if we do get, and there's a lot of bad news priced into global economic data. So if we do start to see some bounces, and we do start to see some range breaks, then you are going to see a lot of people get flipped, and you could get some upside volatility. Now, that's never as scary. You don't see headlines, $50 billion added to the market. You only ever see $50 billion wiped off. But volatility is volatility. And where we are at the moment is any positive data surprises are going to have much bigger impact than the negative ones priced in. That's not to say that the IMF was overly exciting in downgrading their forecast last night. They've dropped the global growth rate to 3.1%, down 0.2 from their last forecast, and down about 0.5% from where they were just in April. They also see that the negatives are there for the outlook for growth. And I've written an article about that at Business Insider, which I'd encourage you to have a look at today. They reckon that there's three powerful forces threatening the global economy. China's economic transformation, obviously, away from exports and investment-led growth and manufacturing in favour of consumption is one. The fall in commodity prices, which is obviously related to that, and then the impending increase in US interest rates. Interesting that they say that impending increase. So clearly the Fed has continued to signal to other policymakers at least, and that's what we saw from the RBA yesterday in the government statement, that they are still going to tighten. So it's going to be a very interesting period ahead. So as we open the day, the ASX should have a slightly better day given the commodities were rallying. Oil, copper looks good, base metals higher, CRB higher. News for the ASX today. So I'd expect that we should have a good day, better than the 6 points that the futures market suggests. In terms of the data today, I've got AI Group Performance of Construction Index, I think, although I haven't seen that in my inbox yet. In Japan, we get the BOJ monetary policy decision. It's a holiday in China again, but we've got FX reserves from China, which I think will probably interest a few people. Tonight, German industrial production, French trade, and UK manufacturing. In the US, it's nothing worth worrying about. Guy DeBell from the RBA is also talking tonight, so have a look at that. But overall, I think we're building towards a reversal, or a larger reversal, of what we've seen in August and September. So we'll have to wait and see how that plays out over the days and weeks ahead. That's it from me. I'll be back tomorrow morning at around 9 o'clock for my video wrap. Stay safe, good trading, and have a great day. I'm Greg McKenna. Bye for now.